Um, we talked about the main cash book, and then we were able to list out types of the main cash book, and one of the types is the one column cash book. Recall that I explained that as an organization, whether big or small, cash transactions are either carried out through the office, or let's say through the cash at the office, or through the bank. And because we are saying one column cash book, we are recording these transactions in separate books. What am I trying to say? What I'm saying is that the cash transactions that were carried out through the cash at the office are recorded in a separate book, and then the cash transactions that were carried out through the bank are recorded in a separate book. That is the reason it is called a one column cash book. So we can simply refer to the one column cash book as single column cash book. It is a book of account for recording cash transactions made through the office separately and through the bank separately. It does not record office cash transactions and transactions through the bank in one book. It does recording separately. In a very simple term, what I am trying to say is that we are keeping record of transactions that were done through our bank account in a separate book, and transactions that were done through the cash we kept in the office in a separate book. Remember, I said that in some organizations they are able to differentiate between minor transactions and major transactions, and what we are talking about here is what? Major transactions. The minor transactions are recorded in the petty cash book, and that we will talk about later. Talking about what? One column cash book for major or main transactions. The one column cash book records cash transactions, and because there's a date that these transactions occur, it will record the date of the transaction, it will record the description of the transaction and the amount of the transaction. But remember, because it is cash transaction, it is possible for cash to be received or cash to be paid, and as such it records cash receipts against cash payment. The one column cash book tries to record on two sides, the receipt side and the payment side. The receipt side is usually the debit side, while the payment side is usually the credit side. So really what we are trying to do is to record transactions in terms of cash receipts and in terms of cash payment. So when we interpret the transaction and it suggests cash receipts, it is recorded in the what? Receipt side or the debit side. If it suggests cash payment, it's recorded in the what? In the payment side or the credit side. Now let's look at the preparation approach. Now there are two approaches to preparing the single column cash book. We have the vertical approach and we have the T approach. The vertical approach flows everything vertically. Still showing the receipt side, which is the debit, the credit side, which is the what? Payments. While the T approach tries to create two sides, a left side and a right side. The left side being the debit side, showing the date, description, and the amount of cash receipts, and the right side being the credit side, showing the date, description, and the amount of cash paid. All right, now this is an illustration on how to prepare the single column cash book. Remember, I explained to you, I said in preparing the single column cash book, you are going to record cash transaction for the office separately, and you record transactions that have gone through the bank separately. So we are going to be looking at these questions. We are still using Mr. Yauvi, a wholesaler, involved in the distribution of what? Flour and sugar. Now, for the month of January 2020, he carried out the following transaction and approached to prepare cash book for his cash transactions and bank transactions. So we're going to be looking at these transactions, and then we record the ones that are related to, bank, and the ones that are related to what? Cash. As you can see, we are recording them separately. A separate book for bank transactions, a separate book for what? Cash transactions. So let's start. They said 1st January opening cash at hand, 500,000. Remember, we are recording transactions related to what? Office cash, and transactions related to what? Bank. And since we're seeing opening cash at hand, it means that what? That it is related to what? Office cash. So we'll go to office cash. Remember, I told you, you're recording the date of what? The transaction, description of the transaction, the what? Receipts, which has to do with cash received into the business, also called what? Debit. And then we have payments, which has to do with what? Cash paid out of the what? The business from the office cash. So January 1st, the opening cash at hand here is what? A receipt into the business. So it's recorded at the debit side there. We have 500,000. January 2nd, opening cash in bank. This has to do with the bank, so we'll record it in what? In the one column cash book for what? For bank. January 1st, opening cash in bank. The money is coming into the organization in our bank account, so it will be the receipt side, 1,500,000. 4th of January, purchased goods in cash. Before you interpret it, you have to understand the transaction for you to know if it will go into what? The single column cash book for bank or single column cash book for what? Cash. Purchase goods in what? Cash. If we are buying goods, we are going to be paying cash. So it is related to cash, and it is what? A payment item. So we go to our cash book for single column office cash. 4th January, purchase goods in cash, 250,000 as a payment, because money is going what? Out. The next transaction, 6th of January, bought equipment, paying by check, When we pay by check, it has to go through the bank. So it is what? Related to what? The single column cash book for what? Bank. And it is a payment. So we say what? 6th of what? January, bought equipment paying by what? Check. It will go to the what? Bought equipment paying by what? Check. It will go to the payment side, which is 500,000. We are recording it under the single column cash book bank because it is a bank transaction. The next question says, sold goods for what? Cash. 280,000. When you sell goods, you receive cash. So that's a receipt, and it is related to what? The single column what? Office cash. So we come and we say 8th January, sold goods for what? Cash. It's a receipt. 280,000 naira. The next one, 10th of January, sold goods, receiving check for what? Payment. When we receive check for payment, it will be paid into the what? Bank. So it will be recorded in the what? Single column cash book for what? Bank. So we have 10th of January, sold goods, receiving check for payment. 270,000. The next one, we have 12th of January, purchase goods, issuing check for what? Payment. It's a check, so it's going through the bank, and then it will go to what? The single column bank what? Book, and then it will go to what? The payment side. So that is January 12th here, the date. The description says purchase goods, issuing check for what? Payment. 370,000. The next one here is what? 13th January, paid rent in cash. It is going to affect the what? The one column cash book for office cash, and it's a payment. So that is 13th of January, paid for rent in what? Cash. How much is that? 60,000. On the 14th of January, paid for wages in cash. 40,000. It is going to affect the office cash book. So that is 14th of January, paid for wages in cash. It's a payment. 40,000. On the 15th of January, paid for repairs in cash. 20,000. It's affecting the office cash. That is 15th of January, paid for repairs in cash. 20,000. Now, on the 16th, sold goods for cash. When you sell, cash is received. So it's going to affect what? The office cash, but it's a receipt this time because cash is coming in. So we said 16th of January, sold goods for cash, 200,000 on the receipt side. Okay, now 17th, paid for paying. Pause. So, on the 17th January, purchase goods, paying by check. It is related to bank transaction. So we say 17th, purchase goods, paying by check. It's a payment. That's 130,000. On the 19th, bought furniture, paying by check. We have it as 220,000. It's a check, so it's bank. We have 19, bought furniture, paying by check. 220,000. That's the payment side. On the 20th January, paid for machinery, paying by check. That is 100 and what? 80,000. If I'm not mistaken, no. Paid for machinery, paying by check is 250,000. So that is on the 20th. We have paid for machinery, paying by check. It's a payment 200 and what? 50,000. So we have 21st, received check for goods sold. That is bank as well. So we have 21st received check for goods sold. That's the receipt side, 180,000. On the 22nd, bought goods paying by check, 300,000. That is payment and it's bank. So we go to the one column cash book for the bank. So we have 22nd of January by check, 300,000. So on the 24th, paid for stationaries in cash. Okay, 23rd, we need to treat 23rd for 24th. We have 23rd received check for goods sold, 45,000. So it's a bank transaction. We have 23rd received check for goods sold, 45,000. So on the 24th, paid for stationaries in cash, 32,000. It's related to cash, so we go to the cash, cash book for the office cash, which is on the 24th. So we have 24th paid for stationaries in cash, 32,000. It's here coming here because it's a payment, credit side. So on the 25th, we have received cash for goods sold, 132,000. We're receiving cash. It's affecting cash. So we have 25th received cash for goods sold, 132,000 on the receipt side. On the 26th, paid for electricity in cash. It's affecting cash. So we go to cash book for the office. 26th January, paid for electricity in cash, 12,000. On the 27th, paid for office tools in cash, 13,000. It's a cash transaction. So we have 27th here, paid for office tools in cash. The payment side, that is 13,000. Right. We have recorded the office tools of 23,000 in the cash. So the next one is 28, paid for repairs in cash, 11,000. It's affecting cash as well. So we go to the office cash single column cash book. So we have 28 paid for office repairs, 23,000. And then on the 29th, paid for wages in cash, 11,000. It's also cash. So we say 29th of January, paid for wages in cash, 11,000. On the 30th, we have sold goods for cash, 120,000. So it's cash. We say 30th, sold goods for cash, 120,000. At this point, we finished recording our transaction. What we are now required to do is to balance up the account. When I say balance up the account, we want to know how much we have spent and how much we received. That is, at the end of the month, how much was paid in total and how much was what? Received for the bank and also for the what? Cash. So let us look at the single column book for the bank. The summary here, you can see the debit total, which is all the transactions posted to the debit side. It is 2,095,000. Then the credit side, all the transactions from here to here is what? 1,770,000. It means that the total receipts for into our bank account is 2,095,000, and the total payment is what? 1,770,000. The difference is the balance here, which is 2,095,000 minus 1,770,000, which you have 325,000. So you say 31st January, which is the last day of the month, closing balance in bank 325,000. Putting it here because the total receipt exceeded the total payment by how much? 325,000. I'll say it again. The total receipt exceeded the total payment by how much? 325,000. So this is what we expect to have in our bank account at the end of January. So it means that it will be what we will have in our bank account by the 1st of the following month, which is 1st of what? February. 325,000. That is for the bank. So we do the same thing for the cash. We also what? Look at total debit, which is the receipt. We add all the transactions here. It gives us 1,232,000, and all the payments is giving us 461,000. The difference here is what? 771,000. It means that the cash we have at hand, or the cash we have in the office, or at the end of the month of January, we received total in cash 1,232,000, and we paid out of that amount, we paid total of 461,000. That means we have 771,000 left in the what? Office. So you have here 31st of January closing balance cash in hand 771,000. What I'm saying is that what? The receipt for that month exceeded the payment for that month by what? 771,000. So if we check the office cash by the end of the month, we'll be having 771,000 left. And that means by the following month, we'll be opening the business with what? 771,000 as the what? Opening balance. All right, now the same question that we use in preparing what? The single column cash book for bank and the single column cash book for what? Cash. We use the vertical format, but now we are using the what? T format. In the T format, we have the right side, which is the credit side for payment, and we have the left side, which is what? Debit side, as the receipt side for what? For the transaction. So it's the same thing. We are showing date, description, and amount. Okay, but here we are going to show the date, description, and amount of total cash received for the month against date, description of an amount of what? Cash paid for the month. So that's why it's called T. And it's T, as you can see, it's like T here. We have credit, we have what? Debit. The credit side is for payments, the debit side is for what? Receipt. So we have the same thing called single column cash book. We have the same thing for the office cash, and we have the same thing for what? For the bank. So the one here is for the office cash, as you can see, and the one up there is for what? The bank. So it's the same way. We're going to be looking at the question, and then we'll come here and what? And record. Now we have 1st January opening cash at bank. We already know that it's affecting cash. So it will go to what? The office cash. So here is the office cash. Remember I said here, which is the debit side, the left side is for receipt. The right side is for what? Payments. That's credit. So because it's a receipt into the business, we have opening cash at hand here, 500,000 in the debit side, which is the receipt side. January 2nd, we have opening cash at bank, 1.5 million. That is for the bank column here. We have date, description, amount. So 1st January opening cash in bank, we have 1,500,000. 4th, purchase goods in cash, affecting cash. So it's a payment. You come to the left side here, the credit side for the cash. So we have 4th January purchase goods in cash, 250,000. On the 6th of January, bought equipment, paying by check, 500,000. So this check is affecting what? Bank, and it's a payment. So that's what? The credit side. So we have 6th of January, bought equipment, paying by what? Check. How much is that? 500,000. Okay. Then on the 8th January, we have sold goods for cash, 280,000. It's affecting cash. So you come to the cash side. If you're selling goods, you're receiving cash. So it is on the debit side, which is the receipt side. So we have 8th January sold goods for cash, 280,000. Now on the 10th of January, sold goods, receiving check for payment. For received check, it goes to the bank. So since you're receiving, it's a received item, but it's going to be in the bank what column. So we have on the 10th of January, sold goods, receiving check for payment. As you can see here, 270,000. Debit side, which is the receipt side. So we have 12th of January, purchase goods issuing check for payment, 370,000. That will be going to the bank side because we are actually issuing check. That's payment. So we have 12th January, purchase goods issuing check for payment. We have 370,000. The next one here, we have that's 13th of January, paid for what? Rent. So what do you have here? 60,000. Now paying for rent in cash, so that will affect cash. So we'll come here 10th of January, we have paid for rent cash, 60,000. 14th January, paid for wages in cash, that will go to cash. So we have paid for wages in cash. That's the value there. On the 15th of January, we have paid for repairs in cash. That's cash. We have paid for repairs in what? Cash. After paying for that, the 16th of January, sold goods for cash, 200,000. So that will actually come to the cash office cash. So it's a receipt. 16 sold goods for cash, 200,000. The next one is 17, purchase goods paying by check. Check is bank, so go to the bank there, you're paying. That's payment. We have purchase goods paying by check on the 17th there, and that's the value there, 130. On the 19th, bought furniture paying by check. It's still bank, so we have 19th here, bought furniture paying by check, 220. On the 20th, paid for machinery by check. It is still check, it's going to bank. So we have 20 paid for machinery paying by what? Check. 250,000 there in the bank cash book. And then the next one, we have received check for goods sold, the 180,000. It's a bank, so we go to the bank cash book, and then we come to the debit side, which is the receipt side. Received check for goods sold, the 180,000. And then 22nd, bought goods paying by check. It's the bank side, as you can see. So 22nd, bought goods paying by check, 300,000. And then we have 23rd, received check for goods sold. That's a receipt, and that's bank column. As you can see here, 23rd, received check for goods sold, 45,000. So next one, we have 24th, paid for stationaries in cash. It will affect the cash. So we'll come here. 24th, paid for stationaries in cash. We have the value there as 32,000. So the next one, which is 25th of January, received cash for goods sold, 132,000. So you're receiving, that's the receipt side, but it's going to be the office cash. So what do you have? Received cash for goods sold, 132,000. The next one, we have 26, paid for electricity. It's cash. So we have credit side here, paid for electricity in cash, and that's the value there to be 12,000. Then the next one, we have paid for office tools in cash, 13,000. It's still cash, and the credit side is payment. So we have 27, paid for office tools in cash, 23. That's 13,000. Paid for office tools is 13,000. So the next one, which is 28, paid for repairs in cash, 23,000. It's still cash. So 28, we say paid for repairs in cash, 23,000. Then the next one, we have paid wages in cash, 11,000. Definitely it's cash. We're paying wages, 11,000. Then we have the last one there, 30th of January, sold goods for cash. That's sales. Money is coming in receipt. We come to the cash book, office cash book. Then we have sold goods for cash, 120,000. Now, what I am trying to explain, is that you can see the T illustration is in a T format, or the T approach. We have the single column cash book for office cash, and the single column cash book for what? For bank cash. And then what we are saying here is that the bank single column cash book for bank shows the debit side, which is for receipts on the left side, and that's the debit, and then we have the payment on the right side, and that's what? And that is credit. So at the end of the month, you have to compare the total in the receipt side against the total in the what? Payments, and that is summary here. We have debit total here, 2,095,000. Credit total 1,770,000. The difference is what? 325,000. So as you can see, 31st January here, closing balance in bank, we have 325,000. So by the following month, February 1st, our opening cash in bank will be 325,000. You're doing the same thing for the cash here. This is the total debits, and this is the total what? Credits. Total debit is 1,232,000. Total credit is 461. So the debit side, which is the receipt side, is 1,232,000. The credit side, which is the payment side, is 461,000. So the difference is what? 771,000. So in the office, at the end of the month, we have balance of 771,000. That's why you're having a closing balance here, cash in hand, 771,000. So by the following month, you're starting with what? 771,000, which is the opening cash in hand or opening office. So now we have done an illustration on one column cash book, and we understand that the one column cash book tries to record transactions that are carried out through the office separately, and the ones that are carried out through the bank separately. So we have one column cash book for the bank, one column cash book for the what? For the cash separately. And that is what we have illustrated using both the T approach or the vertical approach. Now, you can practice questions. If you have issues or this that we have solved, or some other questions that you have practiced and you want clarifications, you can reach me on 08136506356 or send me an email, jeremiah.dosu@gmail.com. Thank you.